This is the video lecture on the master budget. Now in this lecture we're going to talk a little bit about the budget process, and then following this video we're going to have a video demonstration problem in which we will actually have practice with calculating a budget. Now the budget is the responsibility of the accounting department, but even though it's the accounting department's responsibility, we are by no means the only people who work on the budget. We actually want to have input from every single department in the business. We want to talk to all the supervisors. We want to talk to all employees at all levels and get their input, because they really have a lot of insight into how much things are actually costing. And even though they will contribute information to us and give us their feedback, ultimately it will be the accounting department itself that assembles that information and actually prepares the actual budget. And when we do this budget, what we're really doing is looking ahead to the future and trying to predict how much things are going to cost so that we can predict how much money we're going to make or possibly lose. And that'll help us with our decision making. Now when we prepare a master budget, there are going to be different components. And it's always in a particular order, because each component that we fulfill will then feed information into the following component, and eventually it will all come together on the final budget. So we will have a separate sales budget, purchases budget, and expense budget, and then that will all feed into our cash budget. Now the first component would be the sales budget. And this is the part where we predict our level of sales. This always has to be completed first, because the sales figures are going to then be the basis for everything else that we do in our budget. And this is based on the company's opinion and their prediction about how much they're going to sell. So we always have to take a good close look at this. And when we do this, it will have two supporting schedules. Schedule A, which we will prepare first, will have the sales themselves, and then on Schedule B we will take a look at the cash collection. And that's very important, because as we know from our previous experiences, sometimes we do have credit sales, so we don't necessarily always get the money up front. In fact, sometimes we get the money later on. So it's very important not just to know our sales level, but also the timing of when we're going to actually get that money. So that'll be addressed in Schedule B. Then once we've prepared that budget, we then move on to the purchases budget. This budget is designed to help us predict the level of purchase of inventory, and also it'll help us with the timing of the cash payments. So this is always prepared immediately after the sales budget. And it also has two supporting schedules, the purchases themselves as well as the cash disbursements. Because think about it, we sometimes have cash purchases and we sometimes have credit purchases. And whenever we charge our purchases, we don't necessarily pay for it up front. So the cash disbursements, again, that'll give us the timing of when these payments are actually going to be made. Then immediately following the purchases budget, we prepare the expense budget. And this is going to help us analyze and predict all of our various expenses. And there will be many different expenses: salaries, utilities, taxes, insurance, all the various expenses that have to be paid. And this also has two supporting schedules: Schedule E for cash expenses and Schedule F for total expenses. Then once we have prepared all the other budgets and all the other supporting schedules, then we can proceed with the final budget, which is the cash budget. All of the other supporting schedules will feed into this budget and give us a lot of the information that we need. And then to complete this cash budget, we will see how much actual money the company is going to have, and that'll be excellent for helping us predict the future. Because we need to know, are we going to have to borrow money? Are we going to be able to pay the money back? It always gives us a good idea of where we're going. And like I said, in the next video, we will actually have a demonstration where we will prepare an actual master budget.